Ryanair earnings slide. The discount airline posted a 20% drop in first quarter profit. It's also warning that the walkout by trade unions and traffic control strikes are making customers hesitant to book flights. Joining us now for his first interview of the day is Ryanair CFO Neil Sorahan to discuss the company's second quarter earnings. Neil, great to see you. Thanks for joining us this morning. So we've just read out what the concerns are and what we've heard today. Can you give us a sense of what the forward booking curve is looking like?
Yeah, well, we're better booked than we were at this time last year, albeit marginally ahead. We're seeing lower fares, however, over the last couple of weeks, particularly in light of the strong weather that we've had here in the UK, the heat wave in Northern Europe, the World Cup, which is now over, and of course uncertainty around strike action. We're now guiding our average fare up only 1% into the second quarter, which is below the 4% that we previously guided. However, we'd slightly stronger numbers in the first quarter of the year, which is why we're able to retain our guidance for the full year at the 1.25 billion to 1.35 billion profit level.
Neil, what's your read on what's happening with oil prices? The previous quarter, that was key in your outlook. You cautioned that this could inevitably lead to a wider shakeout in the industry by the end of the year. What is your fuel hedging strategy at the moment? Where do you see crude going?
Well, we ourselves, we're very well hedged for the current year. We're about 90% hedged at about $58 a barrel, which is well below the $75 to $80 a barrel. I think oil at these levels is good for our is actually good for our industry. It'll help lead to consolidation within the sector. I think as we get into the winter, the weaker unhedged carriers are going to see pressure on their cost base and indeed on their cash generation, which will lead to more consolidations and failures within the sector. We've said for many years we're moving towards a 5 large airline strategy. I think Ryanair will clearly be one of the key players in that strategy in Europe. And oil at these levels, while leading to higher costs for all airlines, is probably good ultimately for the sector and take some capacity out.
We've got to go back to the strikes because there are even more expected this week. I'm wondering how long you expect the impact of strikes to last and what it would take, therefore, for you to actually change your guidance.
Well, I think in fairness, we've made very good progress with the unions over the past number of months. We put a lot of things in place to make ourselves very attractive to pilots and cabin crew alike. We've got the 20% pay increases, which are now starting to come through in the numbers, as you would have seen in the first quarter. We've reduced the training costs significantly, so we're seeing an awful lot more pilots and cabin crew coming through. We've invested heavily in a simulator and training capacity within Ryanair, and of course we're the most stable employer out there. We're a 20 billion market cap company. Over 90% of our pilots have accepted pay increase at this stage. We've made very good moves in relation to the UK and in Italy, where 45% of our pilots are based. We've now got union recognition there, and indeed recently we signed up in Germany. That said, it has been a little bit slower in some of the smaller markets, the likes of Ireland and the likes of Germany. We would anticipate that we may see some more strike action, but we've managed it very, very well. To put it in context, tomorrow we've got a strike in Dublin. That's 16 flights have been impacted out of 290. We've protected all of the key holiday destinations. It's the high-frequency UK routes that are being disrupted because we're able to reaccommodate the customers very quickly, which is hugely important. So I think there probably will be some more strike action, but Ryanair will protect its model. I mean, it's key to us that we have a highly productive but highly paid workforce, and that we retain the cost advantage that we have over everybody else. And in some small instances, we may have to take on strike action. But we've managed the disruptions very well to date.
Neil, I mean, yes? This has dragged on a little bit longer than you would have liked. The reality is it is having an impact on your balance sheet. What additional contingency planning have you set in motion to perhaps offset and buffer that a little bit, give you some breathing room over the coming weeks and see how this all shakes out?
Well, the balance sheet's actually in rude good shape. In fact, we saw our net debt drop in the quarter, and we've got a lot of equity built up in the aircraft. We've retained the guidance at the levels that we put out there at the end of May with our full year results. We're still guiding profit in a range of 1.25 to 1.35 billion. We've factored in the additional costs of the 20% pay increases for pilots this year, so we're not seeing any further impact on our cost base. And in fact, this morning we've stuck with our unit cost cost ex-fuel increase of 6%, which includes growth as well in advance of the MAX 200 aircraft coming in next year, which will lead to significant savings over the next few years for the Ryanair cost base. So look, we're going to work through this. As I said, we've made very good traction with the unions across Europe. Some of the smaller unions in places like Ireland and Germany are going to be a little bit slower, but we're going to get there.
Neil, I need to ask you about Brexit. How confident are you that you'll be able to keep all your normal routes operating as of March 29th, 2019? Well,
like everybody else, we're very hopeful that the transition agreement will be signed and that will buy more time back to the back end of 2020. But I think there's maybe a little bit of overconfidence that this deal will actually be put in place. There's still a chance of a hard Brexit in March 2019, but we would be hopeful that we will see the transition deal. That said, we continue to work hard to make sure we've got contingencies in place, whether that's on the shareholder side in relation to voting rights so we retain our operating licence, whether it's getting an air operator certificate here in the UK to protect our domestic routes, and of course talking to airports around Europe in the event of a hard Brexit that we can place aircraft elsewhere for a short period of time. But I would be hopeful that the transition deal will be signed.
Neil, last time we spoke, you said or made it clear that you're looking to deepen and develop your relationship with Boeing and with Airbus. Has there been any particular progress on either front?
Oh, we're talking to everybody. We always do. We're well fixed for aircraft for the next few years. We start taking 210 Boeing 737 MAX 200 game-changer aircraft in the spring of next year. These will lead to significant cost savings for us. But Laudamotion, an airline that we have a 24.9% investment in and will hopefully increase that to 75% over the next few weeks, is an Airbus operator, and we would have plans for it to grow to between 30 and 50 Airbuses over the next few years. So very keen to develop a relationship with Airbus as well as Boeing as we move forward.